Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering dry ships. Yet again, I believe this is about the fifth video. Check out some of the other ones for more details about what's going on with dry ships. But in this video, I'm going to be covering some quick, simple things, such as the move up in the earnings report. Now, the earnings report has been moved up till February the 7th, and as you can see here, a lot of people took interest in that, and it popped, and then it held at around 4-ish. Of course, it popped closer to 6, but then it kind of settled down to 4-ish since the $2.35 pop. The 6.30 here, around here, somewhere in there, popped for the reason of the Kalini Investments offering, and then of course it settled down after that and went down a little bit. It didn't crash completely, which is a good sign, and since then it's been kind of settled here in the after hours at 424. The earnings report, as stated earlier, will be February the 7th on Tuesday, and it's going to release its fourth quarter and full year results, and depending on what that is actually entailed in the earnings report could either make it pop really nicely or crash pretty badly. Thing to note that this particular article has highlighted from the Motley Fool is that during the third quarter, the company pulled in an average of 3,442 per vessel each day in revenue. However, its operating costs were 4,926. That means they were actually losing money, and they've been having a rough time lately. Of course, hopefully with the new money from Kalini Investments and some other issues to cover some debt, their new strategies put in place will actually make them pop and be in the green. Something to note here is that in the after hours it will be on February 7th, so look for in the close of February 7th, aka Tuesday, when there might be some excitement. I'm personally not going to hold it through the earnings report, but I'm going to try to ride it through up till the pop for the excitement of the earnings report. It's the least risky play, and of course, if it looks really good, I might hop in there for it after the earnings report is released. Other things to note here, there's some long-term coming up here that the Motley Fool didn't really cover. The first two new buildings to be delivered are on a 5-year charters, 1-year extension options to Shell International Trading and Shipping Company, and the second two on 10-year charters to Clear Lake Shipping, a subsidiary of the Governor Group. DRYS estimates that the revenue backlog from the 4 charters is around $390 million, including all 6 option years, which equate to an average rate of around $30,000 a day. They needed the Kalini funding to cover new vessels and all that kind of stuff, so keep that in mind. What to look out for as a filing when the earnings report gets filed, or anything else that might get filed between the Monday trading day and the Tuesday close. Other than that, that's about all I wanted to cover here with dry ships and the shipping industry. Some of the other shipping stocks are looking pretty good as well. Make sure to check them out and like, share, and subscribe to this video if you'd like to have more videos just like this. Have a nice day, and thanks for listening in.